Hey traders, welcome back to the another weekly edition of the market preview. Here, by the means of technical analysis, we are trying to make predictions for the next trading week. And this week was very interesting. First of all, because the market was very volatile, and many traders started complaining that it's like impossible to trade so volatile market. And it's so kind of fun because when the market is slow, when the market is consolidating, everyone is blaming the market that it is slow and it is not moving. But once it really starts moving, everyone is so angry that it is so, how they say, irrational. Yeah, but this is the true nature of the market. Sometimes it's very slow, sometimes it just consolidates in a sideways, and sometimes it is so strong. Sometimes we see so strong swings, and it is totally normal, and it is just the reality of the market. For today, we will discuss with you the dollar CAD chart and gold. We will discuss potential trading opportunities for next week, and I will show you a couple of interesting things to consider. And lastly, what I wanted to add here in this intro is that I heard a lot about the market manipulation, about the central bank's intervention in the market, and so on. And that that in the past the markets were much better, and now it looks like technical analysis won't work anymore. My answer is simple: stop crying, stop complaining. Invent the system, invent the trading system that will work no matter what. Try to realize that it is in the normal conditions of the market and just master the system. Master the system and learn how to make money on that. And it doesn't matter why the market acts like that. We are not looking for a reason. We are looking for a system that will work no matter what, yeah? Yeah, so with such mindset, let's go and start with the dollar CAD pair. Please we start the analysis from a daily time frame. And on the daily time frame, the very important thing that happened with the market this week is the breakout above the key structural resistance. Here is our wide area of resistance, and it clearly was broken to the upside. Clearly the market broke and closed above that, and it makes us think that now bias is much more bullish on the dollar CAD on the midterm, and it looks like right now that it is highly possible that this 135 level will be reached quite soon, yes. But though the midterm bias is bullish, what should be also embraced with you is that on the RSI we see with you a solid divergence. Even after this very strong, very impressive movement to the upside with this huge bullish candles, we see the lower high on the RSI, and it is a very important signal to consider. Just because the RSI divergence, trust me, as the counter trend trader, the RSI divergence is the significant signal to consider when the market will probably start reversing. And moreover, what we should notice with you, we should pay attention to is the price action on Friday. We can see with you that the market has formed a very peculiar dodgy candle I would say, plus the rejection candle. And what is important about such kind of the rejection candles, the end point of the rejection is very important for us. And what I do in such kind of situations, I draw the horizontal line based on the highest point of the rejection, and I'm trying to find out why the market dropped from this area. Is there any reason for that? Is there any structure on the left? And you can see clearly that on the left we have with you a very strong level of structure, strong historical level of structure, and it looks like this time for the market participants this level it is still important. And just try to analyze what happened on Friday with the market. Before that, the market was very bullish. And on Friday, bulls keep pushing the market upwards. We saw a 78 pips movement to the upside. Strong movement to the upside. And once the market reached this level, was reached, the market immediately dropped. It dropped and the market has closed on the level where the previous candle has closed, yeah. So it is a very important signal for us to consider, and it looks like next week we can expect with you further retracement to the downside. So kind of we probably will see the picture like that. The market will continue retracement. It will accumulate the buying volumes to push higher to the identified higher levels of resistance, yes, higher level of structure, the 135 level. Then what I also noticed is that here, switching now to 4 hour, on the 4 hour, once again following the price action, you can see that we saw a very impressive bearish engulfing candle, the candle that just eaten the previous bullish candle and started this bearish movement. And this was a perfect signal for me to look for short trade. And on Friday, I have opened a short trade based on that. So once I saw this engulfing formation, I switched to 1 hour. And on 1 hour, I started following the market. And as you can see, here what happened with the market, we find this high, we retraced, the market tried to retest the current high, but it didn't reach it. It reached this level here and formed the lower high over here, and then the market broke. It broke below the minor structural support right here. Yes, it broke below that, retested, and then the market dropped. And based on this retest, I have opened short trade on Friday evening, and now I expect further continuation to the downside. My current position looks like that. I have my stop above the lower high right here, and my initial target is this minor structure right here, the 133.6 level. So kind of decent risk reward for the initial target right here. And I also think that then the market may go even lower. And I have the second target for the trade. And for the second target, I have picked the 133.25 level. The level based on the recent structure, the strong structure support right here, yeah. So the current position looks like that. This is the first target. Here I will take the half of profit, and here goes the second target for the trade, yeah. So kind of decent opportunity. This is the counter trend trading opportunity, and they are highly risky, and only with the strict application of rules we can make money trading against the trend, yes. So kind of interesting opportunity, and if you like that, please don't forget to like this video and support me with likes, because it truly shows that the stuff that I teach you, that I show you, that it truly makes sense to you, yeah. So now let's go to discuss gold. Before we switch to gold, I want to briefly show you the harmonic pattern trade that I took on Friday. And this also was a very interesting opportunity. Here, if we take with you the daily chart, you can see that during the last weeks, the euro-yen was kind of bearish. It was bearish, but it has clearly respected the structure on the left right here, the rejection that the market has made in January 2019. And it looks like the structure is still very important for the market participants, because just recently we saw a strong bullish movement from that. And now as the market reached that, we once again see the rejection. So for this reason, I have opened the market with a buy limit order based on the candle closes right here. And it looks like here we will have the true winner. A very good winning trade. It's, as always, it's quite early to make the conclusion, but I have already protected the position with the stop to break even. So even if the market reverses and goes down, I will be protected. But I still expect that the market will reach the 382 level at least. And here I expect to make at least the almost 100 pips of profit just on this easy harmonic godly formation. Yeah, so note that these patterns are very, very efficient, and as the classic patterns, as the harmonic patterns, the patterns work if applied properly. If you are not a dick-handed, if you are truly want to learn, you will find a way to apply them properly. And don't listen to those guys who say that patterns don't work. They work if applied properly. Yeah, remember about that. So now going to gold. This week turned to be bearish for gold. First, the market is formed a very interesting engulfing formation. The market clearly engulfed the previous bullish candle, and then the market dropped. And this drop on Friday was quite significant, and now it will be a key moment for the gold. But before I explain you why it will be a key moment, I want to show you one thing. The majority says that this drop from this level, from 1688, was the manipulation, was someone's intervention. But I have a bit different story for you. Here if we look left on the daily, we can see that there is no structure. Yeah, the market hasn't been on these levels for quite a while, but on a weekly we still have structure on these levels. Yes, we still have structure, and the market has also been much higher than the current levels. So what I do here, I take the highest point of the market, the highest point of this rejection, and as always, I draw the horizontal line. I draw the horizontal line and look left. I look left because structure leaves clues. Yes? And looking left at structure, we can see with you that the market reached a daily, not daily, a weekly structure resistance. Yes? Level that was respected 1, 2, 3 times, even 4 right here, 4 times in the past. It's shown its significance in the past. Yes, it was 2011, 2012, but the market in the past respected this level. And most of the time, the historical levels matter for the market. Even if it was 10 years ago, 100 years ago, no matter. Historical levels matter. And from this historical level, the market dropped. Yes, it dropped, and now if we analyze with you, here we can project with you the trend line. The trend line based on the 2 touches here, and looks like here we have the 3rd confirmed touch. Moreover, on the left here we have with you a strong horizontal structure. So next week will be very important for gold for 2 reasons. First of all, because it's bearish, and the reaction on this horizontal structure really important for us. There are 2 scenarios to see. First one, the market may respect this structure. It may respect and continue its way to higher levels of structure. Or it can start coiling right here. It can start coiling and occasionally break. And in case of the breakout of this strong structure, in case of the bearish violation of this strong horizontal structure support, it will open the potential for further bearish continuation to lower levels, to further for further continuation to lower structure support. And I think in case of the bearish violation of this huge horizontal support right here, huge underlying structure, then the market can easily drop to 1460s. Yes, so pay attention to gold. For now, it's still reasonable to take the trend continuation trades from this trend line. It's still reasonable to buy with the risk, protecting yourself with the tight stops. But if we see the breakout, if we see the further bearish continuation to lower levels, pay attention, because our bias may switch to bearish. Yeah. So constantly adjust your trading plan. Adjust your view as the market changes its picture, and always be prepared. Be prepared for changes. If you want to be successful in this sphere, trade not should be, trade what you see. And no matter if you have a bullish bias, if you 100% think that it should go higher, always see the chart, see how the market reacts, and act accordingly. Yeah. So I hope that you enjoy this weekly edition, and please don't forget to like this video and leave a comment. If you have a question, please write a question. I will answer. And thank you for being here. Truly appreciate that. And I will see you next week.